Okay, so we're going to get going now. It's my pleasure to introduce our next keynote speaker. And Samir Desai is the CEO and co-founder of Funding Circle, who are really revolutionizing small business lending. They are the world's largest online small business lender, and they're doing great things here in the UK as well as in the US. So without any further ado, over to you, Samir.
Great, thanks. On a personal note, I'd just like to thank Peter. I came to the first LendIt, which was a couple of years ago in New York, and it was a much smaller room than this. It's a testament to the way the industry has grown, but also all the great work from Peter that he's brought all these people over from over the Atlantic as well. So thank you again. Just roll. Roll. Okay. So I just thought I'd talk a little bit about Funding Circle before we start. So Funding Circle is the global leader in marketplace lending to small businesses. We launched in the UK at the end of 2010 and in the US in October 2013 by putting our business together with Endurance Lending Network, which is a local peer-to-peer lender in the US. Currently lending around $60 million a month. We actually lent close to $20 million last week globally, and growing at over 150% a year. So, really fast growing. 30 million run rate revenues, 200 employees, and we've raised around $120 million of equity capital from the same investors that backed Facebook, Twitter, Skype, Betfair. So, there's not many financial services investors there. This is really a tech play on our side. Our quarterly new lending is growing rapidly. We're about to go through our biggest step up in quarterly origination, so going close to $180 million. It's great. If you look at our industry, we have two main hubs, San Francisco and London. That's where the biggest players in the market are. You could argue that China, there's some crazy stuff going on there, but I won't talk about that. Funding Circle is the only company that operates in both London and San Francisco, in both the UK and US markets. And for my sins, no one has traveled between these two hubs more than me. I've gone 20 times in the last 15 months, a lot of time on planes, a lot of jet lag. My wife's not very happy. But I have 10 major insights here from all my travels, which I'd like to share with you. So the first is that small business borrowers between the UK and US are actually remarkably similar. The thesis about Funding Circle was we didn't go into consumer loans in the UK. We felt that the similarities between small businesses across geographies were greater than the similarities between different types of customer. And I've been very pleased to see that has borne out. So from average loan sizes to sales, the number of employees, years trading, average loan duration, they are remarkably similar. What's also great is that in the Funding Circle model, about 45% of the loans that are taken out by small businesses are for growth. We do working capital finance, but a lot of that is actually for growth purposes, so buying stock, things like that. And for me, that is actually a great thing. What we've learned is these small businesses are people like us. We've struggled ourselves to get finance for our business. We've gone on the road, tried to do that. And what we do here is we help businesses like us to succeed. And because of that, our net promoter scores across both the UK and US are very high. Close to 90% in the UK, 60% in the US. Banks do a bit of a better job for small businesses in the US than the UK. And the reason for this is businesses, the process of getting a bank business loan is antiquated. You have to go to a bank branch, you have to put on a suit and a tie. It takes 15 to 20 weeks. It's a very archaic process, and what Funding Circle does is bring that into the 21st century. 50% of our loan applications actually come outside of business hours. You just can't do that with a bank at the moment. So the other thing I've noticed, which is a slightly strange thing, is UK average net returns now on the Funding Cycle platform are around 7%. You can actually get 7.8% today if you go on, so anyone with any spare change, go on the platform. But for the same risk of credit, we found that US returns are higher. So our US expected returns are in the 10 to 14% range. I have a lot of theories around this, clever things, but my observation really is that the US is a much bigger market, but much more inefficient. So whilst there's a lot more competition, thousands of community banks, actually, the cost of credit in the US is very, very high. Now, in the UK, investors can take advantage of leverage to boost their returns on the Funding Circle platform. But, there is definitely a yield difference there that exists, and we expect to perpetuate for a good time yet. The other thing that you're starting to see, which other people have touched upon, is banks are starting to partner with the market leaders in different sectors. There's a very innovative partnership between Lending Club and Union Bank, where they're starting to design new products. You've seen the first UK retail bank, Santander, partner with Funding Circle. And I think this is a really good thing for the sector. So, and I think there's been a maturing on both sides. So I used to sit on bank panels, and we used to say, no thanks banks, and we took out adverts in papers to diss banks. Equally, banks used to say, talk about Funding Circle and P2P lending is a very niche activity. But I think there's been a growing up on both sides. And now what we're starting to see is both sides recognizing the mutual benefits that can take place. That means that banks can service more of their customers. More loans can be priced by marketplace lending than a bank can do. And also it allows marketplace lenders to tag team on deals. So where a bank might not want to lend any more than a certain amount, they can actually extend the amount that the business can borrow without losing it to another bank. And that's good for the business, good for the bank, good for us as well. So this is something that has been touched upon by a lot of other panelists, and I want to talk about it as well, which is that the UK exhibits varying degrees of transparency versus the US market. So there are a lot of our friends here from the US market. I think you would be very surprised to see the lack of detail you can get on most UK platforms about loans. And this is something I believe in passionately, because the real difference in what we are doing and what happened before is around transparency. It's around taking this market into the 21st century. What does transparency mean for me? It means detail on your financials. Funding Circle publishes details on our profit and loss, our full financials, even though we don't have to. We publish details on every single loan originated through our platform. Almost real-time data on the performance of those loans. And detailed information about investor net returns. And if you look at Lending Club, Prosper, they've done great service to the industry in bringing it that way. And I passionately believe that if we don't embrace transparency in the UK, or if other platforms don't embrace that, we are at risk of essentially making the same mistakes we've made before. Opacity. Cormac talked about skin in the game. Our skin in the game is relentless transparency about our platform. And if platforms aren't willing to do that, I feel that they should just become balance sheet lenders. This is what makes marketplace lending different to others. And look, transparency is hard. We put out more and more data all the time, and we get criticized because we don't put out more. We saw recently in the US, Lending Club were forced to reduce the amount of data that's available to investors. There's been uproar. But then equally, Lending Club's in the quiet periods probably can't defend themselves. Lending Club is one of the most transparent platforms in the world. They voluntarily took the decision 2 years to increase the amount of data that they put out. So I do feel that we're never going to get thanked for transparency. Maybe Peter might write a nice blog post or AltFi, but it's very important for the sustainability and the difference we're going to make in the world. So the other big difference between the US and UK market is the mix between retail and institutional lending. In the UK, the majority of our lending is done by retail investors. On our US platform, the majority is done by institutional investors. And I think the arrival of institutional money in the UK is a good thing. It's helping us expand the market. But what I want to do is take a step back from this question, which we talk about all the time, retail, institutional, and actually think about what are we really doing here. What we are building in marketplace lending are exchanges. And all good exchanges, like the London Stock Exchange, NASDAQ, New York Stock Exchange, eBay, have a variety of different participants. There's retail, there's institutional, government agencies. So what is really happening now is a maturing of the sector and a move towards greater participation, and that is a very good thing. So Cormac touched upon this a bit earlier. What these graphs show are the loss rates, cumulative loss rates on funding circle loans in the UK in 2010, 2011, 2012, and 2013. And as Cormac touched upon, the early returns on funding circle weren't great. Small business lending is hard. The data isn't readily available. You have to build your own track record. But what these graphs show is that we have got better and better at being able to assess credit risk. Now, the other thing I wanted to highlight, which isn't publicly available, which we'd like to try and get there as well, is the performance of funding circle rejected borrowers versus the performance of funding circle accepted borrowers. So the nice thing about small business lending is that you can track publicly the performance of businesses that you don't lend to as well, because the majority of the reason for businesses defaulting is because they go insolvent. And what you can see there as well is that the ratio has dramatically improved now. So for every funding circle borrower we accept that defaults, there are 4 that will, of the rejected borrowers that won't. So this is not an improving of the economy, although that's in there to some extent. This is an improving of credit rate, our credit models and our underwriting systems. The other big difference between the UK and US markets that I've observed is that the majority of platforms in the US operate completely automated credit assessment. The number of meetings I've been in when people have said, oh, what's this manual thing that you guys do? It's so outdated. Whereas actually, if you look at the majority of UK platforms, we actually will always have a manual element to our credit assessment. Now, that doesn't mean that we've got people pushing paper around or things like that. But what we do have is experienced underwriters with automated systems around them looking at these loans on a loan-by-loan basis. And what we have found at Funding Circle is, no one will be happier than me if we could automate the whole thing. It's a cost to my business. But what it does is we found it reduces loss rates by about 50%. So that manual credit assessment element is incredibly important. Now, that's money out of my pocket and into investors' pockets, but we feel passionately that including a manual element of this process, given how esoteric small business credit is a really important element of the assessment process, and something we operate in both the UK and US. People have touched upon this as well. This is the danger of going third, I suppose. There's been a great amount of state support for small business lending in the UK. The UK government in 2013 committed £20 million to lend through Funding Circle. That was at a time when the business was barely 2.5 years old. We hadn't really had that much credit data, but it was a testament to the forward-thinkingness. And that has been followed by a £40 million commitment by the British government, British Business Bank. We have 10 local councils and universities now lending through us. We have had a very proportionate regulatory regime put in by the FCA. By contrast, our US business is regulated by every state, the SEC and FINRA, so a bit more complicated there. And Funding Circle, and I'm sorry to Giles, Zopa as well, became a government Future 50 company, which gave us a lot of help with things like visas and stuff like that. So the amount of state support in the UK has been incredible. That has so far been lacking in the US, but we're hoping that over time, as they see the maturing of the industry, there'll be more support there as well. And the final thing that's been quite interesting is that in all these areas, marketplace lending is starting to solve more problems. So Funding Circle started doing commercial property and property development loans in March this year, now doing about £5 million a month of that stuff. because there's a big housing shortage in the UK, and we were getting inundated by small developers who have been cut out by banks. You see, Lending Club has moved into tuition finance, dental finance, even small business finance, which we don't like so much. And RateSeller are also doing some innovative loans with gift-gaff, starting to move into more areas. And that is also a great thing. We heard Pete talk about multi-asset earlier. Moving towards solving more problems increases the depth of our marketplaces, the depth of liquidity, and that will mean that we have the chance to become even bigger. And the final thing I just wanted to talk about is there's lots of predictions here. I wanted to talk about the funding cycle of the future, like what I think funding cycle looks like in a few years. So one of the key things about marketplace lending is that we offer fundamentally better technology and fundamentally lower cost. The efficient, we don't have branches. We may have some branches, so we don't want to rule that out in the future, but the majority of this is around a very scalable, efficient technology platform. Now, Cormac won't like this, but one of the big benefits of marketplace lending is the fact that we don't lend our own capital, or that we hold much lower levels of regulatory capital. And what that means is, on an efficiency basis, the return on equity or the profitability of the platforms is greater, but it also means that we can be much more efficient in distributing money. We've seen Basel III regulations coming out relatively soon. The UK is saying that for every pound a bank lends, they need to hold, for every 25 pounds they lend, they have to hold a pound of capital. In marketplace lending, you can have 1,000 times as much lending as the equity capital on your balance sheet. And that is what will really drive efficiency in the financial services sector, the ability to really scale this type of model. So synthetic leverage is higher. I would like Funding Circle to be the first point of contact for small business owners. That is the biggest challenge we face as a business, is trying to get small businesses to stop thinking bank first. That means building a brand. We're on TV. I had a minor heart attack when I signed off the invoice for that, but it's going right. But we have to build an awareness and build a brand around this business so that they are coming to us first. They're not just going to the bank branch. They're actually looking at this as the best way of doing it. And if we do that, then I believe that marketplaces like Funding Circle will become like bond markets. If you're a big business, you don't have to borrow from a bank. You can go to a bond market, borrow the money directly from investors, and that is between 20 and 40% of big business finance, depending on the market. And that's what this can become. Hopefully lending 100 billion a year. A bit more than Cormac said, but let's see. The other big thing I believe about these platforms is that they work better globally. Funding Circle was the first platform to really go global, and we're seeing more and more of this stuff happening. And the big reason that works is because liquidity, or the lending side, I believe, will connect across geographies. We see that all the time. We have big investors in the UK that lend with us in the US. We have big US investors that are lending with us in the UK as well. So on the institutional level, liquidity is connecting across geographies. And it's up to us to create the structures and the ability for high net worth and then eventually retail investors to do the same. And if you can create that kind of global liquidity pool, it creates enormous advantage. It means that, it effectively means that you build a marketplace, I think, like no other. Businesses like eBay, Uber, Airbnb, most of those are local, actually. Some people like us travel quite a lot. We might take Ubers everywhere. But the reality is you build that business locally, whereas you can build marketplace lending businesses globally. I believe SMEs are underserved in every market I've gone to. I've spent a lot of time on the road, going to various markets, Italy, Spain, France, India. Everywhere I've gone, I see small businesses being basically screwed by banks. And I think you will see, my prediction is you will see the rise of global champions. This will be, I believe this will look more like tech than it will look like banking, where actually you don't really have that many global banks with significant amounts of market share. And the final thing is, again, something we've talked about, has been touched on again, which is banks will be partners with marketplace lenders. What marketplaces allow you to do is service a higher percentage of credits and price them better than a bank. A bank, especially in these times with high amounts of risk capital being required by regulations, are not willing to lend to the riskiest businesses. We know that. 33 to 40% of the loans that Funding Circle does in the UK are to businesses that would not have been able to access credit if it wasn't for us. So what we're allowing the system to do is to go down the risk curve more and more and help those customers that banks are unwilling to help, but we can. And that is a really good thing. And what I also think you'll find is that actually some banks, and we have already had conversations similar to this, will actually prefer to do all of their small ticket lending through marketplaces like us. It's more efficient, the technology's better, it is just a better way of doing things. And I think that I've already started to see that happen with smaller banks. It'll be interesting to see if a big bank ever adopts that as well. And that's it. So thanks for listening.